Now that you are pre-approved and have an idea of what you actually qualify for, I want to go through what you can expect with the different loan types if you qualified for multiple different kinds. I know that choosing the right home loan can often feel overwhelming, but don't worry, I'm here to help you navigate your options, and so is your lender. Okay. So there are several different types of loans, and the best one for you is going to depend on things like your down payment, your credit score, and where you are buying. So let's go ahead and break down the main options and ones that you might have available to you. First up is the conventional loan. This one is the popular option for most buyers. You're going to need a down payment of at least 5% or potentially 3% if you are a first-time home buyer. You can generally qualify with a credit score down to 620, although sometimes a bit of a different number is required. And one of the great benefits is that you can get rid of PMI, aka private mortgage insurance, once you have reached 20% equity in the home. This is also considered the best loan in the eyes of a seller because the appraisal does not include a requirement of repairs in most cases. Your second option is typically going to be an FHA loan. This one is often an awesome option for buyers who have a smaller down payment available or a slightly worse credit score. You can potentially qualify with a credit score as long as 580, but be aware that PMI never goes away on FHA loans, no matter how much equity you have. So keep that in mind when calculating your long-term loan costs. FHA loans also sometimes require repairs for the loan to be approved. So if you are trying to buy a fixer-upper or you think that's what's going to be in your price range, you might run into some hiccups with this loan type, and sellers might not look at it and be super excited. If you're looking to buy in a rural area, a USDA loan might be the perfect fit. These loans require no down payment, 0%, and you can qualify with a credit score typically down to around 580. The only catch is that they're only available in designated rural areas, so we're going to need to check to see if your desired location qualifies. And they work similarly to FHA loans, where if it comes down to it, there might be required repairs that happen at the moment of appraisal. They also take longer to close due to being part of the special rural development program. Finally, if you're a veteran or active duty military, the VA loan offers you the ability to purchase with a zero down payment required. You can also qualify with a credit score as low as 580, depending on your loan profile. Even better, the funding fee can sometimes be waived for eligible veterans, making it an amazing option for those who do qualify. Just make sure that when you are comparing your monthly payment options, keep in mind that the funding fee will need to be considered if you're not eligible to waive it, because that can add on a hefty amount. Now, while down payment is an important part of the loan to consider, it is not the only cost to consider, so keep that in mind. Closing costs can add up quickly, so if your cash is tight, we are going to want to look into having the seller help cover those costs. To make that work, we are going to need to submit a competitive offer that makes the seller more likely to agree to pay some of those costs. When we are choosing the right loan for you, I'm going to help you weigh these factors to make sure that you are getting the best deal possible. Don't worry, we are going to figure this out together, and we're going to find a loan that fits your needs and your budget. If you have any questions, you know I'm always here to help, and your lender is a fantastic resource as well. Let me know how I can help, and let's get you set up with a loan that makes sense.